Welcome to Secure Money Mindset, the ultimate podcast for financial planning tips and strategies. Our episodes are designed to be concise and to the point, lasting no more than 30 minutes. Each episode features seasoned advisors from Secure Planning Group or an outside financial specialist discussing crucial issues and providing actions to consider when addressing your top financial concerns. We value honesty and transparency, meaning we present both the good and the bad news in a clear and concise manner. Our goal is to provide you with reliable insights and practical guidance. Be sure to hit the follow button to stay up to date with our latest episodes. For more information, please visit our website at securepg.net. Let's dive into this week's episode of Secure Money Mindset.
Hello and welcome back to the Secure Money Mindset podcast. I'm your host, Mike Lenge, and I'm with the managing partner and director of Secure Planning Group, John Simone. And we're here today to talk to you guys about the importance of funding buy-sell planning using life insurance. So there's a lot to jump into. For starters, we wanted to have John simply just explain the importance of buy-sell planning and kind of how life insurance plays into that.
Sure. Well, Mike, thanks for having me here today. And so realistically, the purpose of a buy-sell plan is to basically make sure that in the event that something would happen to your partner, let's say you have a business and there's two partners, something would happen to your partner, whether it's a death, disability, or retirement, that there's an agreement in place that will have a predetermined result, meaning, for example, we're talking about the importance of life insurance in buy-sell planning. If there is a death of a partner, that you need to make sure that you have things in place to make sure that that business can continue to go on and not be financially strained. So using life insurance as a funding mechanism to be there for pennies on the dollar, it creates the bucket of money available for that surviving business owner to pay out the estate of the deceased partner.
So jumping into kind of the role of life insurance in buy-sell planning, more generally speaking, can you maybe speak more specifically to the types of insurance that we would use within buy-sell planning and how that looks from the employer's perspective or the business owner?
Sure. So in buy-sell planning, there tends to be two types of insurance, types of policies that are used. The first type is called term insurance. And term insurance is there basically for a particular term period of time. It's usually, I would say, less expensive than permanent insurance, which is the other type of coverage. But what you'll tend to see there is that, let's say a business plans to be in existence for another 15 years. You would end up buying some term insurance coverage the last 15 or maybe a little bit longer, say 20 years, just to create some what-if scenario happens in the future. So you'll tend to see term insurance used more in buy-sell planning because of the cost. The other type is permanent insurance, which is really coverage that's there for your lifetime. And the other benefit to permanent insurance is that it builds cash value. We tend to like to talk to our clients and use an analogy like term insurance could be like renting an apartment, where permanent insurance, you bought a home. Permanent insurance, you're going to have a higher premium, just like you would have a higher mortgage payment than your rent in your apartment, but you're actually building equity in that policy. And over time, there's different types of permanent insurance policies that can build equity more conservatively or more aggressively, depending upon the client situation.
In terms of kind of examples that you can use, how do the folks at Secure Planning Group work with employers to kind of go through that process?
Sure. So let's let's use an example of where this could come into play. Mike, let's say you and I are partners in a company, 50-50, and the business is worth $1 million. What we would end up doing is I would look to, well, one, we would have a buy-sell agreement, which is a legal agreement. It's a document that basically defines what would happen in the event that one of us would die or became disabled or decided to retire and leave the business. Mm-hmm. The reason for that is that we don't want to have any animosity. We don't want to have any issues in the future with any other shareholders or employees or family members on what was the goals and objectives of our partnership. So let's go back to that $1 million business. Your share is $500,000. My share is $500,000. I would own a policy on you for $500,000. You would own a policy on me for $500,000. That arrangement is called a cross-purchase agreement. Okay. The purpose of that is, let's say I get hit by a bus tomorrow. My estate needs to be paid $500,000. That's my share in the business. Now, part of that operating or buy-sell agreement would say, if this happened, there would be a purchase of my shares either at a stated value, or you can have what you call an appraised value at the time. Now, it's really important as time goes on to make sure that, we'll talk about this probably a little bit later, but the importance of consistently reviewing your buy-sell agreements as business situations change. But in that scenario, business is going to be hurt if one of us passes away. So we've created a $500,000 bucket of money tax-free to the company for pennies on the dollar to be able to pay off my estate, as opposed to you taking that from cash flow, which odds are you're going to have to go out and hire somebody. You're going to have to go out and train somebody. You're going to lose revenue opportunities that are there. And to try to take that all from cash flow is going to be really detrimental to the company and the survival of the organization. So, again, that's what we look at for trying to fund that aspect of having term insurance there to be able to create that cash.
So obviously the importance is really like a business continuity plan, so to speak. So from that perspective, what are some of the main considerations an employer should really kind of take into play here when they're making these decisions as a company?
Right. Well, buy-sell planning is essential planning. Things could go wrong, and you really want to make sure that for the longevity of the organization, you want to address it. You also want to make sure that you're addressing it with qualified people. You want to talk to your financial planner, your insurance agent, or your tax professional to make sure that you're looking at this the right way, and you're also covering the appropriate amount of the business, the shares of the business. Life insurance is just the funding side of it. The legal, I do want to bring this up. There's a lot of times we've gone into a client scenario where they say, oh, we have a buy-sell agreement. We're fine. But the reality of it is the buy-sell is the legal document. It's just the agreement that binds the other partner to what they need to do. You didn't fund it with anything. So whether it's life insurance or disability insurance or a sinking fund or whatever, you're still going to run into the problem of not having the money available, right? And then, we talked about the different types of insurance that are there. Secure Planning Group, as an independent planning firm, we work with every insurance company in the business. So the nice thing there is that you'll hear me say this throughout these podcasts, but we do sit at the same side of the table as our client as a consultant to kind of say, look, this company is going to be more aggressive on their underwriting because of certain situations that could be medical underwriting and so on like that. But it's really important that we look at those options for our clients that are there. The regular review is really, really important because businesses, a lot of times over time, their business is going to grow. So in that example where I used us as partners, what happens if we didn't review that plan in 5 years and our business is now worth $2 million? We're severely underinsured at that point in time. So now we're underfunded and we're going to have to come up with $500,000 of real cash there. So what you want to try to do is either look at when you purchase the insurance, maybe you can you can purchase a little bit more insurance to cover potential growth, or make sure that you're reviewing on a regular basis, and then you're going to have to go out and look at insurance at an older age and at a different face amount. So your premiums will increase depending upon your health and so on, but at the end of the day, you want to make sure that you're constantly reviewing your plan. And then, obviously consult the appropriate professionals when doing this.
I think one thing you just touched on in your answer that really hit home with me in terms of the cost of coverage and how that changes over time and as you age and health comes into play. One of the toughest jobs from our seat is talking to young folks and young professionals and helping them understand, hey, even if you're in the early years of opening or starting a business, why this is important. Can you maybe just expand on kind of what you were touching on with the cost of coverage and underwriting?
Sure. I'll give you an example. We recently did some planning for a two-person business, partners. One, they wanted to buy some coverage to protect each other in the event that the business expanded and grew and they were covered. They assumed that it was going to be a big premium to do this. One was 32 years old, for $1 million of coverage for, again, they were only going to have the business for roughly 10 years. The guy was in very, very good health, like $22 a month. And they were completely shocked that that's all it was. The other partner was older, but in that example, we did look at term insurance, and he came in at about $29 or $30 a month. Now, doing the underwriting, his underwriting came back that there were some elevated levels of things in the blood work. He ended up getting approved, and it increased to about $45 a month. Now, again, these dollars aren't huge numbers, but if you waited till you're 50 or you waited till you're 55, the health issues come into play, and just using those two business owners that were 32 and 40-something years old, it was almost double the premium, I think. So, again, we've gone into scenarios where people have tried to hold off on it, and they think that they're going to, get in better shape, or they're going to get healthier, or so on. But every time they delay, a year older just increases the premium in the first place. So there are some ways to be able to lock in the coverage and then try to reapply to get a reduction in rating that will save you money on your existing policy without them having the opportunity to increase the premium.
So I think that really drives home 2 points: is the importance of working with a qualified professional, someone who knows what they're talking about. And then you've mentioned it a couple times, is revisiting that plan. Is things evolve, your objectives evolve, and I think that's the importance of working with folks like us. In terms of some of the key takeaways that kind of we talked on, or anything that we haven't covered yet, is there anything that you'd like to share with our listeners?
Yeah, sure. As we talked about, funding the buy-sell agreement is just as important as having the agreement. And I'll tell you, sometimes somebody will have the life insurance, but they won't have the agreement. And that agreement is what legally obligates your partner to use that life insurance to buy out your interest. There has been scenarios where we've seen, situations happen to where you don't have the agreement and the business owner takes the life insurance policy and then closes the business. So, that's what actually binds that partner to use that insurance policy to buy out your interest. So you're ensuring that your family or your estate gets what they deserve, God forbid something happens to you. And I know we're talking about life insurance, but disability insurance is another thing that we'll talk about in another podcast. But becoming disabled during this time period is just as important to cover as, God forbid, something happens and somebody dying. So.
Well, we certainly appreciate you taking the time to kind of review some of these topics, and we hope it was helpful for you folks. If you have any questions, feel free to leave a comment or reach out to us directly at Secure Planning Group, and we hope you enjoy the content. Thanks again for joining the Secure Money Mindset podcast, and thank you, John.
You're welcome. Thank you.